Welcome everyone. My name is Kamal Manocha. I represent PMS AIF World. We have been doing these webinars every Friday to represent good, strong, long-term wealth managers, portfolio managers, fund managers who are wanting to actually work to build wealth because of compounding. Equity as asset class we have seen over decades has actually delivered great wealth creation for a lot of clients, but it's not that every investor who invested into equity has had same experience. At the same time, industry has also seen many players coming in, going out, because it is not an easy asset class. If one approaches this asset class with greed, with fear, with, I would say, short-term approach, one kind of fizzles out, and that is where there are very few asset management companies which have actually created the brand, and that too because of their good work. And Enam AMC is one of them. So today, we have Mr. Jiten Doshi, who is the co-founder and CIO at Enam. We are doing this webinar with him second time. I remember we did this webinar with him around 4 months ago, and that time markets were kind of under somewhat turmoil, somewhat uncertainty, somewhat fear. The preceding 18 months were actually painful, but the webinar that we did with Mr. Jiten Doshi was quite hopeful, quite wishful, and quite optimistic. And in about 4 months, the scenario has altogether changed, and that is the beauty of equity as an asset class. And today, in this webinar, we want to address the most, I would say, fundamental question, because the reality is that this bull run which we are seeing, where we saw a pause of say 18 months, is actually going to be the father of all bull runs. And in fact, when we started this platform, PMS AIF World, we started this platform keeping in mind that we understand that this decade, or maybe next 2 decades, belong to India, and hence helping investors make right investment decisions in equities is very, very important. And we want to again and again reinforce confidence, and that's why we have kept the topic of this webinar as India Unstoppable. Now, why is India unstoppable? We have been talking about India, always, but today there is something different about India, which Mr. Doshi would want to address as a foremost, aspect. Welcome, Mr. Doshi, to this webinar, to this forum. Your last webinar was so optimistic; it actually helped a lot of investors and clients. And again, good wishes to you. So the foremost question that I want to ask you, while we begin this webinar and this, conversation with you, is that do you really believe in whatever I have said so far? And if so, where do you see India stand currently? And how is it that India today different than maybe it was yesterday?
A very good evening, Kamal. A very good evening to all our viewers and all the people who have joined in. It's a great pleasure and privilege to always be a part of all these debates with you and discussions with you. Kamal, let me just correct you here that we are at the cusp of the mother of all bull markets. Actually, the bull market hasn't even started. So I'm not going to be just going by stock market prices. I would say that real economic activity in the nation has still to start. We have to still see a huge infrastructure build out. We have to still see huge consumption. We have to see lots of confidence by global investors to invest in India. We have to see FDI to the tune of $200-300 billion coming into India. We have to see the PLI taking off, and we have to see lots of job creation and huge infrastructure creation that we have not even seen in the last 75 years. So I think, for me, I look at two things very differently. And I think, stocks tend to discount what they see into the future. So, of course, I think there's a sense of optimism by what is happening on the ground. And I think because of that, there's a lot of belief that we are on the right trajectory, that the path ahead, the runway ahead is very long and strong. And I always maintain that, for the first time in India's economic history, have we looked at a long-term plan? Have we looked at a long-term trajectory of thought process? And that's why we have not taken any shortcuts. If you look at what this government has been doing between 2014 and 19, it was nothing but a complete cleanup of all the past, I would say, misdeeds of lots of political leaders, of crony capitalism, of whatever we saw, which was not really helping us to take the economy on an accelerated growth path. So I think we lost 4 or 5 years between 2014 and 19 trying to implement GST, demonetization, RERA, consolidation of all our banks, and lots of other such historic movements where actually no one realized, but this was the foundation for a long-term economic growth plan. And I think we are absolutely on that growth path. And without any doubt, I see that India is today making all the right moves, making all the right noises, and backing it up with a very strong plan for execution. And also, I would say, putting in the right policy framework to see that people are enthused to invest where the investment cycle has not even begun. So, like I mentioned some time back also with you in your previous conversation, that the capex cycle is just beginning. We haven't seen anything so far. I'm looking at India's infrastructure sector getting investments north of $1 trillion, and to my mind, that big investment is about to begin post 2024 elections. Also, the kind of confidence that we today have built out amongst all our Indians, there is a belief to reinvest in India. There's a belief of the economic growth ahead being sustainable. So, to my mind, I think it's a very clear direction. We are going to see very strong economic growth backed by very, very strong earnings growth, and of course that will be reflected in stock prices as we go ahead. And to my mind, I think it'll be a phase where we'll see broad-based growth. We will see huge economic activity. We'll see lots of employment. We will see a tremendous amount of momentum, and I think a great respect in the global business community, because we will be seeing a lot of foreign capital participate in India's growth. And I think this is a sign of India's acceptance politically, economically, and socially in the global world. So I think for us, the best times are still ahead of us. We have just laid the groundwork. We've spent 5 years to clean up the past. We have, put very strong measures now to see that the foundation is strong. But I think we haven't even started constructing the building. So we have cleaned up, we have broken down the other building, the old building. We have set the foundation for the new one. I think the building of that new, tall skyscraper that India is dreaming of has still not begun. It will begin now. So I think we are just at that cusp of the growth. The mother of all bull runs has to happen when we are able to create 10 million jobs a year, when we are able to take our exports to $1 trillion, and when we are able to see $1 trillion going back into India's infrastructure, when we are able to see that every Indian has a home, and that becomes a reality. So, in my mind, I think these are all the big things that we are now visualizing for India, which is we are on that cusp of that very big takeoff. And this, to my mind, is going to surprise many, especially those who are trying to time markets, those who are pessimistic about India's future, or those who do not believe in the equity as an asset class. I think they will be quite surprised as we go forward.
And this is quite informing. So, the pressing question that subsequently comes to any investor's mind, and I put myself in investor's shoe, is that we understand we are kind of not quite convinced on this aspect, but yes, stock market always looks to be kind of, buoyant, expensive. At the same time, there are fears that maybe I am entering at a wrong time. So from this point of view, if, you were to kind of give some kind of analytics in terms of how is Enam AMC trying to actually, participate in this expected growth of India's economy to create wealth for its clients. And then if you dissect, your reply by talking about your view on certain sectors which you see as definitely outshining during this phase of growth.
So, Kamal, I have got this question time and again. You asked the same question 4 months ago. So, to many who are always looking to time markets or are looking with great skepticism, they are always finding valuations to be very expensive. And in life, nothing very good comes very cheap. If you want to, it's like you want to really have high quality growth, you want to have a very high quality earnings, you want to see a good return on capital employed, you want to see a good return on equity, you want to see very strong moats in the business, but you want to buy it at a throwaway price. I think whenever these throwaway prices have come in the past, investors who were skeptical have still remained skeptical, have always remained on the fence, and have not been able to participate when the right time has come. Again, I have seen time and again, we keep getting this question that valuations are expensive. Now, valuations are expensive, keeping what sort of time frame in your mind? As an investor, I don't look at 1 or 2 quarters. I look at 1 decade ahead of myself. And I think, when I took the same view last decade, that's when I was able to reward my investors with a 20% CAGR in my returns that I gave them. So at that point, also markets were looking expensive. I think positioning yourself for the mother of all bull markets with such a big broad-based participation across every sector, with huge trends like digitization, like financialization, formalization of the whole economy because of GST, what we are seeing, aspirational consumption because of premiumization that is happening across the whole country. Urbanization has not even begun. There is a whole manufacturing renaissance we'll see purely because of the PLI, purely because we are seeing high-tech manufacturing coming to India and a big recovery in the capex, which is happening now after 15 years. I think we have enough opportunities on the plate. And India is today going to be in the golden decade of high-tech manufacturing our own aircrafts, manufacturing mobile phones, manufacturing semiconductors, manufacturing EVs and the batteries, manufacturing green hydrogen. Now, these are all highly technologically intensive industries where I think India is trying to make a mark for itself. In fact, India is trying to be the big new green energy player in the world. So I think these are all big revolutions that are happening. They are game changers, they are national transformers, and you will see that they will bring an entire effect on the next generation. So to my mind, I think, we are very well positioned to capitalize on several of these trends. We believe it's going to be broad based. We believe you can easily construct a portfolio if you take a 5-year view. Evaluations may look cheap or expensive depending on what your time horizon is. I think if you're playing the India game for the next 2 quarters, then you're in the wrong place. But if you're looking at India for the next 5 years, next 10 years, there is no better economy and no better market in the whole world than India. I think we all are blessed to be at the right time, at the right place, with the right government leading us. So I think great time for us, Kamal.
Sure, Jitin. So, how is it that Enam AMC trying to kind of, encash in this potential growth over next decade or over next 5 years? And, what is kind of your portfolio allocation in terms of various sectors and your conviction in various industries? Do you see any new industry like we saw specialty chemicals emerging after 2015? Any small, industry which is emerging as a big allocation, or you want to stick to older industries like older, I would say, sectors like banking and financial services, IT, pharma, consumption? So what are your views in this regards?
So, Kamal, while you consider banking and financial services as an old sector, I think the sector has undergone a humongous transformation. Today, that sector is no more the old sector that you and I used to see it when we were teenagers. And, I have lost all my hair seeing the transformation of these industries. Today, banking is in a very different orbit. It's not the traditional bank where you and me used to go and deposit our checks, and we used to basically sit and write checks and realize our money 4 days later. I think it's a different industry which is now supported by a phenomenal, a digitization stack built by all the banks. Mobile banking has become the name of the game. And I think banking anywhere has become the name of the game. Also, when you leverage this with what government has created, the stack that government has created, like UPI, etc., I think it is now widely used by 400 million users every day. On the other hand, also, I think you have increased the number of people who can access your banking system. You have increased the speed of that. You have increased the services, the bandwidth. So, in all, I think banking is completely reinvented. It is not what it was even 3 years ago. So, I think to my mind, industry across industries setting benchmarks. The old are adopting to the new ways. The new have to adopt to the old ways. Like many of these new age companies were not believing in cash flows, or were not well capitalized, or did not have enough promoter intent in terms of equity participation. I think they will have to come back to what the old companies are doing in terms of generating cash flows and being conservative. So I think it's a blend of the old and the new. It's a blend that I see opportunity everywhere. I don't think we need to go and look for any new sectors. Every sector is emerging with enough opportunity. We are seeing them imbibe all the new practices, and we are seeing them emerge even stronger and create very solid moats and very strong entry barriers that none other could come in this sector in the years ahead. So India has been underinvested for the last 15, 20 years. Where have we seen any new player in cement, in steel, in commercial vehicles? Where have you seen any new bank come up, any new age bank or any new bank which is worth its salt come up in the last 10, 15 years? So I think, we had crony capitalism from 2004 to 2014. We had a restructuring of India between 2014 and 19. From 2019 onwards, we had COVID, we had wars, all of that. So India has gone through a humongous phase of lots of challenges within which capital has not been invested, barring a few houses like Reliance and Tatas and Adanis, who have created huge assets. Now, we may call them traditional businesses, but once industries start consolidating, we see that they will return to pricing power. That growth will be huge in the country. Ultimately, if I have to build a $1 trillion worth of infrastructure, I need commercial vehicles, I need steel, I need cement, I need everything. So I think, it is not about the old or the new. I see opportunities across. If I'm talking about the world's largest commercial aircraft orders being placed by Air India and Indigo, that only tells you that there are going to be 1 billion passengers in the future from India flying within the country and flying all over the world. So I think sector after sector, which we may have written off, I think all those are emerging stronger. They are bouncing back. We believe that consumption will take off in a big way. So will capex. So will investment, infrastructure, and we see, discretionary consumption, several categories actually exploding, because as your GDP per capita goes from the current level of $2,000 to $2,500 to about $4,500, $5,000, you'll see a humongous growth. And I think our dream of every Indian to own his own home, also will lead to huge amount of growth across home building, across home improvement. So I don't know, wherever I put my finger, I see that kind of growth. It is broad based. It is very participative from all segments and sections of society. And I see that the government is putting in strong policies that are actually, encouraging industry to plow back and reinvest. 5 years, and we have had a tax rate of just 25%. This is very comparable to any other economy in the world, and really enthuses people to plow back their profits and reinvest and grow their businesses. So I think we have a very, very promising environment of social, economic, and political stability that is enthusing all-round growth and is creating all-round opportunities, the kind we have not seen in 75 years.
Jiten. So, based on your 3 decades of experience, you are saying all these things, and then you are seeing new India ahead of us with a lot of, obviously, unmeasurable opportunities across the sectors, and we see passion in your, I would say, experience as well as in your conviction. But from the point of view of investors, I want you to share your wisdom in terms of how is it that investors should consider, or what are the factors that investors should consider when they create a diversified equity portfolio to participate in this growth over this decade.
I think investors need just two things. I think nothing else is really required. Have a very, very strong conviction with great clarity as to where the nation is heading, and that this is the investment class that I need to participate in, and have that faith and belief in India's growth as an economy. What will come between you and your growth will be only your belief and conviction. Conviction can never be borrowed. It has to be a self belief that I am convinced about where the country is going. My own conviction is so high that I'm 99.67% of my net worth is in equities. So basically, as I mentioned to you, conviction is something that investors need to develop on their own, study what they are doing well enough, have the ability to choose the right managers, have the ability to basically have a nice understanding of what product offerings are there, how basically investors' own risk appetite, etc. Balance that. And the second big thing is never look short term. I think the whole game is long term. So I think, my message to all investors is very clear. Your conviction and having your ability and patience to stay the game is the only two things you need out here. And don't be distracted by any amount of noise that's caused by research reports, that's caused by media, that is caused by what you have many opinion makers, etc. Stick to your conviction. This is a new India, and this India is going to reward you so richly. This is the golden decade of India's prosperity. And I think the next 25 years belong to our country. This is exactly where America was in 90s. We have the inherent advantage of a young population, so a very favorable demography. We have a huge export outsourcing opportunity. We have an infrastructure build out that is happening. We have great relations with all our trading partners. We are seeing more and more free trade agreements opening up. We are seeing great amount of respect in the international community and a belief that we are the right partners to be invested in. And nobody was looking at us 5 years ago. It was all China, China, China. Today that has swung in favor of India. So I think we are looking at all of this, and now with God's grace, it's all backed by a huge investment that India has made in technology. So this is exactly where America was 25 years ago. It had all the natural advantages that one could think of, and it had technology that powered its growth. Today, we have built that technology, homegrown, open architecture, a huge stack where we are seeing government being so collaborative, being so open, and as we digitize, and we make more than 1.5 billion Indians come into mainstream India. That will be the real growth that we will see. And I'm very, very proud that every Indian will get an opportunity in the next 10, 15 years. This is now, the cleanup phase and the phase where basically you have to lay the ground for a big growth has happened. Now growth will be broad-based. You will see it in rural India. You will see it in semi-urban India. You will see it in urban India. So I think it's going to be superb. Just be around and, have a great belief in your ability to identify the right manager, the right stocks, be participative, and I think just have lots and lots of patience. So I think conviction and temperament, these are just the two factors. Rest of it is noise, just forget about it.
Well said, Jiten. Obviously, because of all this conviction across all the equity fund managers that you are representing as a thought leader, for the equities and asset class for investing in Indian equity markets, there are also various reports that suggest that over years, the number of HNIs have actually been rising in tier 2 and tier 3 towns, tier 2 and tier 3 cities also. Till date, I know, all these large AMCs would have reached out till maybe tier 1 cities in terms of your clientele. Now, since, obviously tier 2 and tier 3 cities are also kind of participating, how is it that Enam as an AMC trying to engage with those prospective clients? And the subsequent question that comes to my mind is that what is your view hence in this regards with regards to wealth management as an industry or asset management as an industry, because that this is also gradually seeing a lot of companies getting listed.
So, Kamal, very good question. I think I completely agree with you. There's a huge wealth creation that is happening across India, tier 1, tier 2, tier 3, tier 4, and tier 5. The big reforms in agriculture have still not started. So, I think you will see that prosperity seeping down to even rural India in the villages. So, I think it's going to be an India story where there are not going to be pockets that will benefit. There are going to be a whole nation that will participate. So, I think, we believe in this, and we as Enam today are addressing that with one of our new launch product, Enam India Vision Portfolio, which is now launched for the mass affluent. It has a minimum ticket size of 50 lakhs. And I think, we are seeing very good traction out there. We want to enhance participation from the smaller centers, town, the tier 3, tier 4 pockets of India. And hence, that's where we are also channelizing a lot of our energies into broadening the participation and also increasing the width of participation, which was not seen before. So it is truly a great time in history. The asset management business is also at an inflection point, and I think where we have seen big trends like financialization, they have meant that all the money that was invested earlier into physical assets, because of the lack of financial assets not being available or not being easily accessible by whole of India. I think that trend has changed a few years back. Today, every Indian is sitting with a bank account, and how many folios have gone up in demat accounts, in mutual funds. That's just the start. We are going to see this over the next 25 years becoming 10 times larger or 15 times larger than where we are today. So I think we are just at the cusp. And if you see equities as a percentage of household savings, it is exceedingly low. I think as we see more responsible fund houses and asset management companies taking that extra effort to spread education all across India, we are going to see a more educated investor class that is going to be more participative, with greater understanding and a longer time horizon to earn returns with greater temperament and patience. That's going to change the game completely in India. And I think over the coming, 1 or 2 decades, you're going to see huge wealth creation and a lot of people participating, because it will be more broad based than it is at this time around.
Jiten. So obviously, all these things are kind of quite, I would say, optimistic, and all of us believe in the same. But at the same time, at times one feels that are seeing this inwardly sitting inside India, and as a global investor, obviously there will be opportunities outside of India also, across other economies also. So if you were to kind of give an unbiased view from that point of view for an ultra HNI client who is wanting to build a global portfolio, how will you kind of advise in terms of allocation towards India versus say other opportunities? Or if you are wanting to stick only to India, then what is it that you feel is very sustainable and very grounded, which actually convincingly makes you believe and advise that one should only stick to India?
So, Kamal, I have the biggest problem with lots of people in India. They are still sticking with the past in their minds. I think we all live with a past where we have seen shortages, where we have seen crony capitalism, where we have seen black marketing, where we have seen high taxes, where we have seen fraudulent promoters, all of that. So I think it's been 67 years of all of that. And thereafter, we have seen 9 solid years of government trying to reform the nation. I think there is a lot of disbelief even today in the minds of the people. I think when the world's best, I would say, growth engine is right in front of your eyes, why would I like to look at anything outside of India? I would rather say that I'd be happy to invest in multiple asset classes. I wanted to diversify, but within India. At this point in time, the West is going through its biggest shakeout. I think they are going through a huge, I would say, deficit. They've all overprinted, currency. They're looking at an aging population, lower productivity, a cranking infrastructure, a lack of any good support services, and very, very high, I would say, social security costs that are driving these economies to a very, very painful phase. And at the same time, I think technology has displaced several industries and jobs in the West. And I think that has shackled a lot of people. So I would say the West is going through a very painful structural decline, the way India went through it in the 80s, in the 90s. So, this is exactly where West and many other emerging economies are today. Now, we went through the last 3, 4, 5 years of turbulence through COVID, through seeing a war, through seeing lots of other upheavals, a breakdown in supply chains. But I think they did very well. Food shortages, fuel shortages, all across the globe. And I think we have not imported 1 ton of food grain. Our godowns are overflowing with food grains. We have done a very good job in terms of food security. We have done a very good job in terms of energy security with our geopolitical placement, not wanting to be aggressive anywhere in the world on this policy. And I think balancing it out very well. I think we have got advantage of cheaper crude. We have also basically looked at how do we reduce our current account deficit, step up our exports. I think all of that efforts you must see, in totality. And you must see how India has performed in its worst period. Actually, first 5 years of the Modi administration was all about the introducing structural changes like a GST and like a RERA and demonetization and lots of things that actually were transformational. Divestment of PSUs, the merger of banks, the cleaning of the banking system, and all of these periods we saw lots of slowdown. And I think that slowdown has actually strengthened the economy. One of the things that never happened was investments with great belief during that period. But I think now that people are seeing how this has benefited us, you are going to see India going into hyper investment cycle. And that hyper investment cycle is exactly what's going to drive a lot of growth, which is missing in the West, which is missing in many parts of the world, because their economy and their economics are in great shambles. So I would say that stay invested and focused in India. If you don't understand other asset classes, don't go into them. I think if you're looking for diversification, diversify within asset classes in India. But I think it's not the best time frame to be anywhere in the world. The second largest bank in Switzerland just blew up all the 81 bondholders' money. So, where do you want to hide? There's no safe place today in the world. So I think India is the safest, India is the best, and India is the most promising. Be very focused. Don't be distracted, like I mentioned earlier. Otherwise, I think being distracted will only cause you to diversify and to go into the wrong areas and probably deplete or reduce your returns. So I think stay focused. It is only India and India all the way.
No, absolutely. This sounds to be, again, as I said, very reinforcing in terms of our belief. But at the same time, as an investment advisor or a fund manager, we need to keep in mind risks. We need to keep in mind uncertainties, and that is what investors also kind of, I can see while we are chatting, while we are discussing, they are kind of stating on the chat box. So obviously, I want to understand from you in terms of the fund management approach at Enam. We have seen over last 5 years, obviously, a lot of these reforms from ground level were being done, but at the same time, we saw in recent past interest rates going up, from almost zero in US to almost close to 5%. Before that, we saw international pandemic, and then before that, we saw kind of a credit crisis, ILFS crisis. Obviously, all these things have happened in the past. Maybe similar thing may happen in the futures because uncertainties cannot be predicted, and these are the risks. And these are the risks which obviously investors want us to talk about to balance our spiel or our talk today. Now, in that context, I want you to address that as an asset management company, which is a very responsible job of managing tax paid disposable wealth of investors over last 5 years or over next 5 years. During these uncertainties, how is it that investors who invest with Enam AMC can be rest assured that the best decisions and the most, I would say, complex decisions will be taken rightly?
So this is exactly what I'm trying to explain to you, Kamal, that today India has arrived our interest rate differential with the US. The US Fed is at 5.5, we are at 6.5. Inflation is higher in the West, inflation is lower out here. We have not mismanaged our economy. It was mismanaged prior to 2014. It's being managed very well right now. If you look at our food security, we are very, very strong. If you look at our energy security, we are making proper transitioning. If you look at our internal productivity, I think we're doing very well. Use of technology, I think nothing can beat India. We have made everything open architecture. We have, while we are the back office to the world, that has been the greatest advantage for us to actually create a huge stack, publicly owned, open architecture, and accessible to one and all, free of cost. So I think we have built so much out here that in the last 3-4 years, the proof of the pudding is in the eating. And I think, while the West was crumbling, whatever you stated as problems were all problems that have occurred in the West. Productivity has gone down in UK. Energy bills for people at homes went up by 200 and 300%. That shows how dependent they were on external source of energy. While India has been importing 85% of its energy requirements, we haven't seen anything untoward like that happening in the last 75 years. Okay, we have not seen our energy bills for consumers going up by 200-300% every year. We haven't seen the second largest bank in our country failing. We haven't seen productivity crashing. We haven't seen factories shutting. We haven't seen fiscal mismanagement like many other Western counterparts have done. They've gone ahead and just printed money. We are as a country have always been living in within our means, frugal means, and that's why the return on equity and the return on capital employed for some of our best companies are very high. And you don't find such companies within such industries anywhere else in the world. We are having dominant positions in by companies in their markets, having market shares which are very high, not because alone that they've sort of gone ahead and increased their market share, but it was lack of anybody believing in those industries and investing. Nobody stopped anybody from putting money in steel, commercial vehicles, or cement, or or confectionery, or passenger vehicles, or whatever. But these companies have struggled. They've built their market share with great respect. They've been around for 25, 50, and 100 years. So I think all of that has culminated into what we are seeing today. It's not just what has happened only in the last 2 or 3 years. And the risks today, if you ask me, are more in the West, are more on the disruptions that the West can cause. But otherwise, I think we are looking pretty okay. We're looking fine. When you talk about risks, I think the biggest risk that we see is the keyman risk in 2024. So we need continuity in terms of policy reform. We need continuity of the government actions to go for further big reforms, to liberalize further, and to set in motion things that they have not been able to achieve in the first two terms, like agricultural reforms, reforms in the defense sector. I would say reforms in terms of integrating all the states and getting better revenues, etc., formalizing the economy in a very big way, bringing reforms in terms of administration across government. So I think all of this needs to be achieved, and we have just set the foundation. We have a very long way to grow. We have actually got very archaic bills. Okay, you have the Electricity Act, you have the you have the Boiler Act, and you have the Power Act, and you have the Income Tax Act. They were all age old, written in 60s and 70s. I think many of those bills need to change. We need to really go forward. We need to invest more in education, technical skills. We need to invest in healthcare. So I think all of this is a huge agenda. And I think we need that continuity and that intent of the government. And I think we don't need to see a disruption politically. That's the big risk and the big fear that we have. And hence, the way we look at it is, I don't think we go for an all aggressive portfolio. Our portfolio is always having a balance of domestic growth stories that are there in the export oriented sector where huge outsourcing possibilities are there. There are defensive bets in industries where earnings may not be skyrocketing, but they are very stable, predictable, and they are very much basically, I would say, sustainable, and they don't fall off the cliff. While there is lots of opportunity in cyclicals, we would limit our portfolio exposure many a time to what we can play within that. So I think it's a careful balance of portfolio construction, and it's how we manage the entire risk across the portfolio. I think that's something that we are always doing all the time, and we are cognizant of what the ground reality is and how do we manage that for our investors. So this is nothing new. At all points in time, we are seeing global disruption right from 2008, and we have seen enough disruption in India from 2004, and it's been the fourth successive government after that, fourth successive term of any government. So I think India is in the mainstream. India is seeing many disruptions, both domestically and caused by global events. And I think we have been positioning the client's portfolio accordingly, managing risk very well, and also trying to give a very balanced approach so that we are able to give you very strong returns despite all the volatility.
Sure, Jiten. So where do you see, India, say, over next 5 years in terms of maybe, GDP growth, or if we were to kind of correlate to equity markets in terms of market cap to GDP ratio? Today, we stand close to, I think, 90-95% in terms of market cap to GDP ratio. So from here onwards, how do you see all these numbers kind of, projecting over next 5 years?
So first of all, I'll just correct you there, Kamal, because I think the numbers of GDP reported are not correct. There is an entire parallel economy or an underground economy or a black market economy that's not fully captured. So the numbers that you read of 3.4, 3.5 trillion could actually easily add another 7, 800 billion over and above that. So, we are in that 4 plus trillion kind of range. If we see the investment cycle firing, if we see consumption going, if we see FDI coming, if we see exports doing very well because India becomes a part of the mainstream supply chain worldwide. If we believe that foreigners would want to participate in India and help us create infrastructure, if all of these fire, right, then I think there is no reason to believe that India can experience growth rates of anywhere between 8 to 10% sustainable over the coming decade. So I think next 10 years, once we have stability, the way we have got stability in taxation, who could believe that 5 years your tax rates are stable? Every year we used to just be waiting for the budget to see how the government would come and change the corporate tax rates, or they would levy new kind of surcharges, or they would make changes. Today your indirect tax rate is all known. We don't even discuss that. There used to be an excise duty, there used to be an import duty, there used to be lots of things that we were all eagerly waiting to see what the finance minister would announce. Today we don't even look at all of that. The budget is nothing but a statement of the current situation of the country, the fiscal situation of the government. We don't think there are policy changes that are coming. The kind of stability that it is providing has actually ensured people that the government is here, wants to sustain the earnings, wants to provide you a level playing field, and wants to transform the economy. Now, that is the greatest belief. Now, if that continues in the next 10 years, then India can easily become a 10 plus trillion economy, which was what I mentioned to you about 4 or 5 months ago. And why do we sit in this disbelief that we cannot get there? We have all the right ingredients, we have the intent, and I can tell you one thing. I was in US a month ago, and I can tell you one thing. Indians are far more hardworking than Americans, far more intelligent, far more logical, far more hardworking. And I think we are all set. Our aspirations and our goals are very high. We are coming from a era of shortages, of paucity of funds, etc. So we value what there is, and we can grow with all frugal means, and that's what very frugal means. We have created a huge public stack of digital infrastructure, the kind that nobody in the world has been able to create. So I think we have it all within us. The coming 10 years should see a few years of double-digit growth on a sustained basis. We're talking about, if you can imagine, you're talking about two airlines investing more than $150 billion over the coming decade in acquiring aircrafts. Then of course there will have to be airports to support it. There will have to be passengers who fly there. These are not small sums of money, or these are not small things that are happening. So these are all the things that can tell you where India is heading. We still haven't seen mobile penetration in full. Where do we have, if I eliminate the duplicate SIMs, we barely have 500-600 million today as our subscribers. We see every single Indian, 1 billion plus Indians, part of 4G and 5G. Now that's a long way to go. And once you are able to bring a digital backbone across rural India, you can open up markets, you can open agricultural markets, you can open the produce for people to sell anywhere. I think all these are transformational initiatives. We not even scratched the surface. I think if we start discounting all this, then I think India is the cheapest market in the world. I think people are talking about it being an expensive valuation. I think if some of these things happen, we are the cheapest in the world. And I don't think that any market offers the kind of potential that India does. So I think, we haven't even scratched the surface. So let's look at it very positively. And the last 10 years have gone in building that momentum. And I would say that large amount of Indians are sitting on this belief. And that's why they are doing revolutionary things, transformational moves. They are doing so much of things to create tomorrow's India. And I have great belief in tomorrow's India.
Brilliant. I think, I echo that. At the same time, I want to be true to my work that I do. So all of us are actually, doing ultimately sales work, and people do various kinds of sales. And I think when I handle my clients, I'm in the business of selling, dream of long-term wealth creation, and that too, we are now kind of selling our country in terms of, that dream, and we firmly believe in that because obviously we are born in this nation, and we have seen, our culture our kind of ethics, and that's exactly what kind of now is kind of becoming our I would say driver of growth. When we see a lot of eyeballs coming to India now, when we do all that, you are obviously I would say 2 decades elder than me, and that's what I that is why I call you as a thought leader. And in that context, I want to understand from you, and I think everybody in the audience would have this pressing question in their mind. You are an ultra HNI yourself. How do you construct your portfolio? What is your personal, I would say, portfolio construction in terms of your own skin in the game?
So, Kamal, firstly, let me just tell you that don't sell any dreams. This is a reality. You're selling reality to the world. A decade ago, we were selling dreams because there was nothing on the ground. We were only dreaming for it to happen. Today, this is not a dream. You're selling reality, right? It's only whether the person sitting opposite you believes in what you are saying and believes in the vision of this country, what the Honorable Prime Minister has laid out for us in the last 10 years, what is happening around across, uh, around us across the world, whatever we are witnessing. So it is no more a dream; it's a reality, right? You can open up a bank account in 2-3 minutes. You can transfer money instantly on your mobile. Everything is digitized today. Everything is moving. Your income tax rate is 25% as a corporate. So all this is a reality. It's not a dream anymore, Kamal. So don't sell dreams. I think package it nicely. Tell people to participate in the reality, because I think this is real. This is here to stay, and this is here to grow, scale, and become one of the biggest economies in the world. I think India is. We have a prime minister has a vision of taking India to $32 trillion. I would say even if I discount 25% off, I would still say we have a potential to become 20 to 25 trillion dollars in the coming decades. So I think be very focused out there. It's a reality. And my single thing I would like to tell everybody here is, please bet on everything with great conviction, do your homework correctly, but don't let your conviction shake every now and then, because conviction is something that we cannot borrow, like I've told you earlier in this conversation. And I want each and every investor to believe in the India story and to stay around for a long term, and to actually look at a very long term horizon, because that is where the visibility today is there, and no other nation in the world offers that visibility. If you ask me, I'm not the right person to ask, Kamal, because just at the start of the call, I told you I have 99.67% of my own net worth in the equities. So I barely keep money in the bank to for my expenses, and that's exactly what I do, because I believe that nothing will match the returns of equities in the coming decade, right? I have mentioned to you a rider that yes, we run a key man risk. We run a risk in terms of what the political landscape should look like, and we hope for a very positive outcome in 24 May. But barring that risk, which is a very big risk, I don't see any other risk. I think India was fraught with too many risks in 2014, when we were looking around us, and everything was in a big mess. There were scams. The banking system was gone. We weren't feeling safe with our money in markets. There was no earnings growth. All of that. So now that is all history. So now I would say that we have seen consolidation across industries. We have seen productivity, efficiency. We have seen a level playing field. So I think it's a massive transformation. So be very clear that this is the time to be in equities in a big way. At least this should be the biggest allocation in your portfolio, depending on the comfort that you have to digest volatility, but to stay the course.
Right, Jiten, I think we will end our webinar here, and I think the topic of this webinar as India Unstoppable has been fully justified. Thank you for your time for today. Talking on this topic, I think this was very much required. As you said, it's a beginning of a father of a new bull run, and maybe a long-term bull run. So all those investors who really believe in India and who have optimistic thought as well as a long-term horizon and can hold their conviction and do not shake their conviction, definitely will build wealth. But yes, you need to select right portfolio managers, and that is where PMS AIF World, we do deep diving analyzing quality, risk, and consistency attributes, and then we recommend products to our clients, because we want our clients to make very well informed and good investment decision. Thank you so much, Jiten, and thank you everyone for joining us today.
Thank you so much, Kamal, and thank you so much to all your investors who have been on. Thank you very much.
My pleasure.